Welcome to the B.F. Anderson Technical Report for October 21st. Technical analysis, it's somewhat of an art. The thing that I would say that's most important about technical analysis is it helps you deal with volatility, because once you start to learn charts and you see day-to-day activity, you start to stretch your thinking out a little bit versus worrying about something one day or the next. In other words, you have rules with technical analysis that tend to keep you out of trouble. Now, the other thing about technical analysis is this. When I was in business school, they taught us something called efficient market hypothesis, or EMH. Now, it's a very academic concept, and it's also very controversial. But the main point they're making is that the market has all the information. In other words, it's strong form. It basically knows things that you don't know or can't, there's no way you can know. So in a way, with technical analysis, it allows us to deal with the efficient market where we start to listen to the market versus us telling the market what to do. The market's going to tell us what to do. So let's just get into it and let's take a look. Now, we're seeing much improvement here. I think we might want to come out of the storm cellar here. We did have somewhat of a correction started in September, pulled back. We got all kind of violations in here, broke the moving averages. But however, we've got somewhat of a reversal and things are looking more positive on the NASDAQ. Now, this particular indicator I really like. It's so steady. And it's the 35-week moving average measured on a weekly basis. And you can see here with the NASDAQ, it really never ever gave a sell signal. So somewhat of a correction with an ongoing bull market is what we're looking at this time. So let's see here. The mid-cap stocks, as you can see here, they've been just going sideways for, month on month. Now, this graph, you can see where it's starting to break out of here of this basing pattern. So the mid-caps are actually looking much better as well. New York Composite, same concept. You can see here a very aggressive up move in the New York Composite. On the small caps, we're still kind of stuck in sideways action. They continue to underperform. It's just a real hard group to pay attention to. Now, on the S&P 500, again, like the NASDAQ, breaking out. Looks like we ended the correction. Now we're starting to rally. Now, again, on this particular indicator, which is that 35-week moving average, it just stayed steady, would have kept you in the market, wouldn't have caused you to panic out. Now, this was another story, but that's for another time. We are going to talk a little bit about some tools that we use on technical analysis here shortly. Now, on the aggression index, why growth stocks? I mean, NASDAQ is mainly a growth stock index. So why growth stocks? Well, I think it's what I understand as an investor. I understand growing companies. However, some people don't understand growth. There's a fear of growth, and instead they understand value. So value investing is where you find old-timey companies that are paying a dividend, that stock price is undervalued. It is a strategy, but I'm not. I was a value manager back in the 1980s, and I just have to tell you, I didn't understand it. Therefore, I really don't think I did well with it. So this particular ratio that I keep showing every week has a lot of meaning to me, because it says, are the growth stocks in trouble or are they doing better? Well, they're doing better. And so the thing about this particular indicator is you've got a 40-week moving average here. If it breaks the 40-week moving average in a meaningful way, I think we're in trouble. But, so far so good. Now, on the three economic indicators that we look at, this is the 10-year Treasury. We're seeing rates kind of starting to pop up again. We're seeing some financial stocks come into our list. The price of oil continues to go up. I think we're looking at some inflation indications here. I mean, the financials are going up because interest rates are going up. So that looks good. Now, on the new lows, we're seeing some definite improvement here. Again, we were getting a little concerned because we were getting, day after day of more than 40. But it looks like it's starting to settle down. So like I say, maybe we can come out of the storm cellar. Now, again, on the inverted yield curve, no inversion. However, we have turned up. And like I have stated before, this is more of an inflationary indication, where this would be more of a deflationary indication. So, if we're going to worry about something, I guess we need to worry about inflation, but I wouldn't worry about it. Now, on the bull-bear ratio, which is a sentiment reading, we're getting back into kind of a normalization. Here was the buying opportunity right here. So this has been an interesting indicator. This one here has been somewhat frustrating. This is the put-call ratio. Just really has stayed in greed all this time. Now, I think what I've concluded about this particular indicator is that it really takes extreme circumstances to get things up here. So we'll just have to continue to monitor. Let's see. Junk bond ratio, again, if we're worried about default, this particular line is going to go down because that means people are selling the junk bonds. However, you can kind of see somewhat of an uptrend here, and actually potentially going to break out of a small base here. So the junk bonds continue to say the economy's okay. Volatility index, things are really settling down here. We're getting back down to these old normal levels. The VIX looks good. Rate of change, in fact, has been dramatically to the downside, which is positive. You want a low VIX. Now, I thought we would talk a little bit about technical analysis. What I did here is I just took generic moving averages. Now, the form of technical analysis that I think makes the most sense is moving averages. Now, there's some people that are into other formations like point and figure. There's all kinds of, I would say, types of technical analysis, but I think using moving averages makes the most sense. So what I've done here is I've taken the 50-day and brought it all the way out to the 250-day. We don't use this as an indicator or anything. I'm just making a point. Now, here is the 08-09 bear market. Now, what do you notice here? You notice how everything just starts looking like spaghetti. That is a real warning. So you then get the downtrend. So the real question is, where are we today? This is where we are today. I mean, it really looks as clean as a whistle. I think we're in good shape with this, and it just basically says we're in a bull market. Now, Asana, which is in the top 5 now. Now, remember with the top 5, what we're trying to do is understand several concepts with technical analysis. One is the price trend. 2 would be the trend, or what we would call the signature of the volume. And then another factor is time. So basically here with Asana, you had along with the correction in the market, it pulled back. Now, one thing also I want to say about corrections in markets. Every bear market I've experienced, which have been several, and I've seen the market go down as much as 50% in a bear market. Every bear market starts with a correction. So when you're going into a correction, it's just a time to be cautious because it could go into a bear market. You just don't know. But this one looks like a correction within an ongoing bull market. So Asana looks good. In fact, the stock gave a gap up yesterday. This is Avis Budget Group. Again, car rentals. The stock has just been on a tear. Probably right here would have been possibly a good buy point, but that's using 20/20 hindsight. Anyway, I never got a volume signature on it. That was the problem. In other words, the rule I have is if you go back 10 days, your volume has to be higher than any down volume day. Well, you can see this day. So for me to get a volume signature on this, I've got to get volume coming in here, which says whoever this big seller is probably gone now, and there's a new big buyer. So that's kind of the logic behind it. This is Lending Club, which I said we were seeing some financials here. This is, all about lending and loans and higher interest rates. So you can see that it is actually broken out. But again, just not really seeing the kind of volume I would like. This is where the original signal came in. Now here's Range Resources. Again, we're just seeing some energy coming in, holding that 10-day moving average without any problem. However, I still have a problem with the volume signature. So that's it. If you have any questions, please let me know. Thank you very much.